our focus to crypto now. Shares of crypto treasury companies coming under some pressure overnight following reports suggesting tighter scrutiny by the NASDAQ is coming. The stock exchange reportedly telling these firms that they cannot sell new shares to fund their crypto purchases without shareholders' approval. Crypto treasury stocks became quite popular in recent years because investors see them as a proxy for the underlying digital assets. Michael Saylor's MicroStrategy, now known as Strategy, is a pioneer, of course, in the space. The stock skyrocketing more than 2,000% in the past 5 years thanks to its aggressive moves to accumulate Bitcoins. Strategy is now the largest corporate holder of BTCs. And here in Asia, Tokyo-listed Metaplanet also grabbing some eyeballs because it currently holds about 20,000 Bitcoins, making it the 6th largest Bitcoin treasury company globally. One of our guests earlier this week, Manuel Stotz of Ton Strategy, telling us that these stocks usually worked as leveraged plays on their underlying cryptos. Take a listen.
If you break down, Chery, the 5-year returns for MicroStrategy stock, over the last 5 years, Bitcoin is up roughly 10x. MicroStrategy stock 30x, outperforming NVIDIA in the AI boom. And only 1/3 of the performance has come from the underlying, from Bitcoin spot, right? Which is, of course, very important. You have to believe in the underlying. If you don't, stay away from the treasury company that does it. But 2/3, the majority have come from intelligent capital allocation, what I just described. And so, of course, it's arguably more volatile than the underlying. But that means in a positive market environment, it dramatically outperforms, but also, of course, it should underperform in a bear market.
Peter Chung is head of research at Presto Labs, and my colleague Lin is joining the conversation as well. Peter, it's always great to have you on. Not enough time every time, so let's try our luck today. Now, does this report worry you? I know it's just a report, but the NASDAQ telling these companies that they cannot sell new shares to buy new cryptocurrencies. If that becomes true and it becomes some sort of a trend in terms of regulatory environment, that could be a negative for crypto treasury companies, no?
Well, if that becomes a reality, I mean, it could put it could dampen the sentiment around these names. But I think these companies have, I think a lot of other toolkits in their box that can, circumvent that type of rules. So I don't think it's gonna necessarily kind of, cancel out all the thesis that's been happening around these names. And also, what we are seeing is that there are other jurisdictions away from the U.S. where these, the crypto treasury operations are taking place, and Japan being a prime example of that. So I don't think this is necessarily means the end of the DATs or the crypto treasury operations.
Okay. Why are they so popular? Why is everyone doing this right now? And sure, you have a lot of Bitcoin, you have a lot of Ether, you have enough stock in your treasury vehicle. So what happens then when you hit that target? Tom Lee says, I want to have 5% of Ethereum. What happens then?
Yeah, so it's the reason why they are popular is because they've seen what happened to MicroStrategy,
yep,
whose market cap was $1 billion. Over the following 5 years, it has become a $100 billion company. And the reason why they were able to do it is because I think it's two things. One is the market gradually recognizing Bitcoin as the monetary asset that can be taken as a store of value. And therefore, any company that can accumulate Bitcoin on a per share basis and grow the balance actually should be viewed as something similar to maybe a company in emerging market that has an exports and therefore growing US dollar reserves. Because I remember in a lot of emerging markets, they're operating in a high inflation environment and their own currency is losing value quickly. But if you are a company that's exporting in the international markets and earning US dollar earnings stream, then you have to value that in a different way, maybe perhaps even applying a multiples, because especially if that US dollar earnings is growing. I think something similar is happening with the way that the market is viewing companies like MicroStrategy, and that's why they were successful, and that's why there are so many copycats out there.
Right. Lynn, come in on this.
Hey, Peter. One of those copycats, as we were just talking about, is Japan's Metaplanet, of course, right? I wanted to ask you about the comparison there with Metaplanet versus Strategy. I know you've done some research there, because the way I see it is that the fundamental risk is the same, but of course Japan has a regulatory environment that makes it easier, right, for them to be able to finance for the Bitcoin. Can you just explain that to us and unpack the risks?
Sure, yeah. So every jurisdiction has their own unique set of stock market rules and regulations. In the case of Japan, what's working in favor of those companies like a Metaplanet is the fact that the filing process for new security issuance is a lot simpler. So they can very quickly issue stocks or bonds in the market, raise money, and purchase Bitcoin. And they can accumulate very quickly, more faster than their counterparts in the US. So that's one thing that's working in favor of Metaplanet. Another is the retail demand. So Japan has there's a tax-exempt investment program for individual investors known as NISA. So if you buy a Metaplanet stock using that program, your gains are tax-free. Now, if you buy the Bitcoin, the tax rate for your gains is something like it could be as high as 55%, according to Japanese tax code at the moment. So, it's no-brainer. It's much smarter way to get an exposure to Bitcoin through Metaplanet stock in NISA rather than buying the underlying the Bitcoin. So that's, I think, another factor that's working in favor of a Metaplanet in Japan versus their counterparts in the US.
But does it carry more risk in that way because it's more retail driven, because it's faster as well?
Well, not necessarily. What we are seeing with the Metaplanet specifically is that maybe retail demand has kickstarted the process, but because the share price is performing, and they also increasingly agree with the thesis that the Metaplanet management is running with, you're also seeing the institutional investors taking big position in this name. I think Capital Group being one example. I think they reported their holdings as one of the major shareholders. So it's a positive feedback loop that maybe perhaps started with the retail investors, but it's also having the positive feedback into the institutional side of the demand as well.
And Peter, we have seen, though, with Metaplanet's stock that it's fallen some 50% since June. And we've seen as well that recently it's been trying to, shift gears, a massive overseas share sale, rolling out preferred shares. It seems like a bit of a defensive move. Doesn't this underscore some of the risks here with companies like these Bitcoin Treasury firms? Yeah, so maybe... The big offering they announced, I think it was last week or 2 weeks ago, 130 billion yen's worth of international stock offering. That's the biggest raise so far. And also it's the first time they are raising money through international share offering rather than the selling of acquisition rights like warrants and convertible bonds. And I think, it showcases that the demand for Metaplanet is not just confined to the domestic market, but also it's a global phenomenon. And also, I think what it shows is that there's a lot of actually angles in a lot of toolkits that these companies can utilize. You mentioned the preferred share issuance, and that's exactly what MicroStrategy has done as well. And the reason why the preferred share becomes interesting is because you can structure in such a way that it can be targeted for the fixed income market. Because when you think about it, depending on how you structure the preferred shares, it's sort of like a perpetually rollable bond. Because preferred shares usually don't. It doesn't have to get redeemed, right? It can be redeemed, but you can also structure in such a way that it doesn't have to get redeemed. In which case, then
it removes that redemption liability from a corporate perspective, which is a very kind of attractive proposition if you are a company that's running a treasury operation, crypto treasury operation.
When you invest in these treasury companies, crypto treasury companies, what is a red flag then? Because I think people get scared if you're not in the industry. When you hear crypto and structure, I don't know, it just sounds risky, right?
Yeah.
So what is something that people really need to avoid? Something exotic may not really fly very well in crypto.
That's right. Yeah. These two words are bad words, right? So I think two things from my perspective. I think in order for these operations to succeed, and not everybody's going to succeed, by the way. That means there's a long tail of, these crypto treasury operations, and you're going to have your share of inexperienced players in the market. So I think the two key things that you need to watch out for is, first one is the underlying asset has to be an asset that has a potential to become a monetary asset, the potential to achieve that status. Now, obviously, Bitcoin is there. I don't think anyone has a lot of, maybe still do, but most of the people who are in tune with what's happening in the industry for the last 15 years know that Bitcoin is here to stay. But once you start to move away from Bitcoin and go down the list.
What about Ethereum, Solana?
I think Ethereum is fine. Maybe also to a less extent, but also Solana is getting there. But once you start to drop off from that, then you have to ask a lot of questions, I think. That's the first thing. The second thing is the management's execution capability. So this operation requires ability to navigate the public capital market and a structured, the right instruments for what these institutional investors are demanding. And that's not an easy task. It requires somebody who has a lot of experience or a lot of understanding of how capital market works and a lot of experience in dealing with these institutions. I'm not sure if there's, last time I counted, there's 27 DATs listed in the US. If you talk about globally, it's even more. I'm not sure if all of them have these capabilities at the moment. So you're bound to watch out for these kind of, I think, the critical signals, I think.
Metaplanet, it used to be a hospitality operator.
That's right.
So does it matter what the company used to be before they pivoted to this business model?
Yeah, I think usually when they pivot, they go through the management reshuffling to make sure they have the right type of a personnel. So I think the Metaplanet has done that. And I don't know if other companies are doing it as aggressively as MicroStrategy or Metaplanet has done in terms of management reshuffling. I mean, in the case of a strategy, you have somebody, Michael Saylor, who really understands it. So maybe it's less of a problem. But I think, I think we need to watch out for these things.
Really quickly, why can't the U.S. do the same as what Japan is doing, all the regulatory arbitrage that you were talking about there?
Yeah, so I mean, the first thing is that the filing requirements for new security issuance is much more rigorous in the U.S. So that they can still do it, but it takes longer. So they cannot issue securities and buy Bitcoin as quickly as the Metaplanet has done. So it's not that they cannot do it, but it's just that the speed is going to be a little bit slower.
Okay. Peter, it's great to have you on. Thank you so much.